What do you think the investment potential is? What are the upsides for developing versus existing?
I've done both. You and I did that project in Bundle, and it was an easy project. Like, we bought, existing warehouse with 5 units in it. It was 40 years old. It's quite old. We gave it a bit of a tidy up. We didn't spend a lot of money doing that. We had to go through some pain getting approvals to strata title it, which we did. But, the project made a 17% margin on cost. What I'd say about that sort of project, say, as an asset class to buy into, is it's got lower risk profile, in my opinion, because we didn't need to get a DA out for a start. We didn't need to get a BA out. We just needed to get a certify and satisfy them that we had the requirements to achieve a strata title, and we did that. We had product to sell on day one. As soon as we got disclosure plans out, we were able to start selling, and people could step into the building and look at it. So we weren't selling off the plan. So there's a lot of advantages. It's not every day you find a project like that. I know some of the investors were pretty excited about the returns that they got, and they should be, because one of them said, I think on one of the webinars, said it's a once in a lifetime. Well, I've done a few like that, so it's not a once in a lifetime. But I have to say they don't come up every day, and we're always looking for those.
They are the golden needle in the golden haystack, because I am looking for those every single day. And what we're finding in the market at the moment is they're out there. But I think sellers are being a little bit unrealistic about their demands on those properties.
I'll tell you the two things that I think are why they're so good. One is risk profile, and think about how you're going to deal with that, and what is the risk. And one of the things that it took me a couple of decades to work out, the biggest risk a lot of developers don't anticipate very well is the risk of time. And time means, markets can change, environments can change, appetites can change, economies change, the globe changes, there's wars or whatever. So the quicker you can be in and out of a project is quite a large level of risk taken down as compared to doing a development from start to finish. And as a comparison, the Burpengary project, we've been there now a year and a quarter. We'll be there probably another 3 years by the time we finish. That's a 4 to 5 year program. And we didn't even get the DA out. It was already there, but we revised it. So, if you got a DA, it could be anywhere between 3 and 6 years. Anything can happen. I've always said that you can project what might happen in the next month, what probably is going to happen in the next quarter, what maybe happen in the next 6 months, and a good chance at 12. But after that, forget it. No chance, virtually. I reckon anyone that reckon they can predict past a year, good luck to them. I don't attempt it. But what I do is I think about how do we get in, how do we get out, what are our options, what can we do if something happens and it didn't work out the way we expected.
Yeah, and we were talking about a Toowoomba project earlier on today, and I really love the way that you've brought that risk mitigation in by showing 3 scenarios, so 3 exit strategies on that project, which I think is fantastic for you as the developer and for the investors as well.